Hi, I'm Hannah Bernard. You're watching Market 1 Minute. Joining us today is Alex Yamini, CEO and President of Sarmaya Capital. Thank you so much for being with us.
Thank you for having me.
So as a real estate investment fund investing in the U.S., what is your mandate for your investors?
Our mandate is rooted in the belief that the U.S. residential real estate sector is strong and will continue to be so. We look for undervalued assets that through our program of rehabilitation, community betterment, and refinance, we can provide provable long-term returns for our investors, allowing them the ability to participate in the over $100 billion residential real estate market in the US with a professionally managed portfolio, a tax-efficient portfolio, and to avoid all of the complications and additional costs of direct investing.
And what really differentiates you from other similar funds?
What differentiates Sarmaya Capital is threefold: community betterment, perpetual ownership, and specific asset class. Community betterment is simply based on the idea of creating thriving communities based on the notion of doing well while doing good. Perpetual ownership only means that we've set up our funds in a way that as our investors take their initial capital off the table, they'll be able to maintain their equity position in perpetuity. And finally, specific asset class. The asset class or subclass that we're targeting, we feel is one, neglected, and number two, positioned for greater than average long-term returns for our investors.
And where are you looking right now?
In one word, Atlanta. We love it. Our focus is more demographic-based than geographic-based, but all of our demographic indicators keep pointing to Atlanta. We look for things like the density of post-secondary institutions, hospitals, medical centers, airports, and most importantly, infrastructure. That's what allows communities to grow and thrive. And Atlanta has all of those. It's got over 15 Fortune 500 companies. It's really an education hub in the Southeast. And it's just positioned to grow on all sectors. That's why we love it.
And you talked about thriving communities. So what is your idea of community betterment?
Well, really the cornerstone of Sarmaya's investment philosophy is based on the notion of community betterment. As I said before, the idea of doing well while doing good. The idea that people have the right to better, safer, nicer communities not only helps our tenants, but it actually increases the bottom line. When we create additional services and amenities for our tenants, that actually increases the intrinsic value of our investments. Really, we're creating a brand on two sides. One, a brand for our investors, because they look to us for above average returns and knowing that they're helping thousands of people along the way. And our tenants look to us because we provide a best-in-class product that they know that the landlord has put their well-being into his bottom line. And that's really what differentiates our notion of community betterment.
It's a refreshing take.
I think so.
So why multifamily?
Well, as I said before, I think multifamily in the US is still positioned to do very well, but more specifically, the asset class that we're targeting, what some people call the renters by necessity asset class, is something that we feel is both neglected and has huge potential to find undervalued assets. Going forward, the Class A, let's call it, structures, there's a huge amount of them on the market now. And we feel that that also gives us an advantage in the Class B and C to provide above average returns for our investors. Finally, the way that we're managing them, and we hope to manage them, we feel that it makes them somewhat recession-proof. And that's why we like that asset class.
And what do you base your due diligence and evaluation process on?
Well, this is something that I'm most proud of, actually, because our team, with the lead of our CFO, Chris Ross, have developed an in-house proprietary analysis software called SAM, the Sarmaya Analysis Model. And so we take current and previous existing data information on any asset, plug it in, and we can forecast into the future on the necessary metrics that we need to invest. So what it does, it allows us to take a look at things like net operating income, rent rolls, taxes, CapEx funding into the future. And it doesn't select an investment for us. What it does, it actually disqualifies investments. So of the universe of investments that come across our desk, SAM allows us to kick out the ones that actually don't meet the metrics maybe 3 years down the road, even though they may today.
Wow. Just another degree of intelligence there, right?
Exactly.
Well, thank you so much. That's so interesting. You have a very refreshing take. Thanks so much for sharing all that with us.
Thank you very much.